The vaccine is being administered, maybe not as fast as people had hoped. What is your outlook for growth this year, and what impact will that have on monetary policy in your view?
Yeah, so there's no doubt about it. The rollout and the prospect for a rollout of vaccinations so that they're widely distributed certainly is light at the end of the tunnel. We have to get there, though. So the light at the end of the tunnel shouldn't blind us to the fact that it's going to take some time for that to be rolled out and so that people get vaccinated. But once we get to that point, I do see that the economy could grow quickly. And I've assumed in my forecasting, and of course you have to make some assumption that the vaccinations will be, widely distributed by the third quarter. And then the second half of the year, we'll see a pretty good pickup in growth. So the year comes in at maybe, about, overall 5% growth and the unemployment rate at 5% or lower than 5%. But that's really contingent on that rollout of the vaccinations. That's the key element here. And while that's happening, support from both monetary and fiscal policy is needed to get us to that point and to that better prospects going forward. And then after that point, we're going to have a post-vaccination recovery that's still going to need support because a lot of the economy is not going to just pop back in certain parts of the economy. It's going to take some time to get people back to work. So I think we have a good prospect for the second half of the year and going forward with above trend growth, but we need to get there first.
Does it seem, I don't know how to describe this, strange or kind of out of sync for you to be talking about a 5% growth rate, a 5% or below unemployment rate, and yet the Fed still in place with the most wide open, easiest monetary policy, $120 billion a month of asset purchases, and zero rates? Does that seem out of sync to you?
No, because of the way monetary policy works and because of the nature of this kind of shock that we've gone through. We've never seen, right, this kind of recession or recovery post, right? So I don't think so. And remember, the things that are guiding our policy are our dual mandate goals. So even though we're going to have a growth rate of 5%, the hole was so deep that we're going to still need to climb out of the hole, and those stronger growth rates are going to get us there. But unemployment, is still going to be elevated. We're not going to be at maximum employment, and we're not going to be at price stability as measured by 2%, and then a trajectory above 2%, which is our new strategy because of how low inflation has been for a long time. So you have to look at progress towards our dual mandate goal to actually understand why monetary policy should be accommodated.
Shepard Smith here. Thanks for watching CNBC on YouTube.